Hello there, this is the Financial Accounting Tutor back with another financial accounting problem. So on June 30th, 2015, Delta Company paid $4,800 for management services to be performed over a 12-month period. Apricot follows a policy of recording cash received in advance as revenues. So record the original entry on June 30th, 2015, record the adjusting entry on December 31st, 2015. So this is an adjusting entry problem. And remember, with any adjusting entry, there's always going to at least be one balance sheet account and one income statement account. So keep that in mind. Every adjusting entry is going to include one balance sheet account, one income statement account. So let's see what we got going on. Okay, so we're doing a journal entry on Apricot's side. So let's see what we're going to do. We are going to, let's see. So the first thing is, how much did Delta Company pay us? That's the first thing we got to figure out. They paid us $4,800 on June 30th. So always start with the stuff that's easy. That's what I always say. Start with the stuff that's easy. So we know on June 30th, 2015, we are going to have a debit to cash for $4,800. All right. Now, what is the credit going to be to? Now, in accounting, when we receive cash in advance before providing a service, it's going to be a liability account. And a liability account is going to be called deferred revenue. And it's going to be for the same amounts. Okay, so now we got a June 30th, 2015 journal entry. Just remember, start with the stuff that's easy. We receive cash. Cash is always going to be a debit when we receive cash, always. So we should at least be able to get that right. And then remember, when you receive cash in advance before providing a service, then it's going to be a credit to a liability account, which in this case would be called deferred revenue. Now let's move to our December 31st, 2015 journal entry. Now, what is that going to look like? Now, we provided the service over a 12-month period. That's what we did. So all you have to do is just take the 4,800 and divide it by 12. So let's see. We got 4,800 divided by 12 equals 400. So each month, we're going to be able to recognize $400 worth of revenue. Because as we're providing the service each month, we can start recognizing that revenue. So now, what is the journal entry going to be to? So, since we're recognizing the revenue now, that means our deferred revenue is going to go down. Our deferred revenue is going to go down. And we know we're going to be able to recognize revenue. So let's just say service revenue. Now, how much is it going to be for? Now, to find out how much it's going to be for, we have to figure out how many months it is from July 1st to December 31st and times that by 400. And we times it by 400 because that's how much you can recognize. So if it said do the journal entry for July 30th, 2015, then it would be 400. If it said it was August, it'd be 800. So how many months is it from July 1st to December 31st? It is 6 months. So we got July, August, September, October, November, December. So we take 400 times 6. 400 times 6, which equals 2,400. And that is going to be the answer, 2,400. And let's see what we said earlier still rings true. It has to involve at least one balance sheet account, one income statement account. Deferred revenue is our balance sheet account because it's liabilities, and liabilities on the balance sheet. And revenues are on the income statements. Now, don't get confused with the word deferred revenue, even though it has the word revenue in there. Anytime you see the word deferred, that is going to be a liability account. So I hope you enjoyed this video. Please like it, subscribe, comment if you want to see me do any problems that you might suggest. You can send them to me in my email, which is in my description, and I'll be happy to look it over and, show you how to do it. So I hope you got value from this video, and I'll see you in the next video.